Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Atibul Gifli. Today I'm going to share about the Islamic financial planning to you. Planning is a crucial part of every aspect of life. Without planning, everything that we did will lead to the failure. Every human needs to have plans in their life, especially in the financial part. According to the Maqasid Sharia, the preservation of the wealth is one of the 5 elements that exist in the Maqasid Sharia. How do we preserve our wealth? Of course, by doing the personal financial planning. In general, personal financial planning can be defined as a process or a methodology of assisting clients in determining their financial goals, objectives, and priorities, and the resources to meet them optimally and practically. The advantages of personal financial planning are increase the effectiveness in using and protecting the financial resources and freedom from the financial worries. Bank Negara Malaysia, which is BNM, has stated that many people spend their money at will, and 75% of the Malaysians have no saving at least 1,000 ringgit in their account. As a result, they have no money to use in the event of emergency, and worse, they are forced to work in the old age because they do not save for pensions. There are 6 steps in the financial planning process. The first is to determine the current financial situation. In this phase, we need to evaluate our income, saving, and also debts, and list the current assets and the debt balances. After that, we will match the financial goals to our current income. The second step is to develop the financial goals. When developing the financial goals, we need to determine the basis of the financial priorities, such as the social pressure, household needs, or the desires. We also need to identify feelings about money and the reason for those feelings. Fear, guilt, and the shames are the common feelings or emotions that people are facing. People are afraid of not having enough money, fear of looking stupid, and fear of being humiliated. By recognizing those feelings, we will be able to develop our financial goals. The third step is to identify alternative causes of the action. We can continue expand, change, or take a new course of the action. For example, if the financial goal is to have at least 3,000 ringgit in 2 years, so we can expand the current situation by doing a part-time job. If it does not achievable, the other alternative is to start an investment. The fourth step is to evaluate your alternatives. When making the decision, we have a lot of the alternatives that we can choose. We also need to evaluate the risk and the uncertainty. This is the important part for us to make the decision. For example, people will tend to have everything at a single time even though they have a limited resources. They want to have a car and a house at the same time. We need to evaluate which one that give more benefits. If we choose a house, so the car will be considered as an opportunity cost. The fifth step is to create and implement your financial action plan. An action plan can be increase savings and reduce the spending in order to achieve the financial goals. If we cannot reduce the spending, we can increase the cash flow. To implement action plans, you may need assistance from others. You may refer to a personal financial planner to get advice on an action plan. The sixth step is to review and revise your plan. The financial planning decision needs to be assessed regularly. Frequent review is needed more if the changing in the personal, social, and the economic factors. For example, after you getting married, you need to review and revise your plan. It is because the previous plan is for yourself. The financial goal will be revised again. After you get sons, your financial goal may be different. Due to that, regularly reviewing your decision-making process can assist you in making priority changes to meet your financial objective. How to measure that you are in the right way to achieve your financial goals? By doing the personal financial statements, you can measure whether you are in the right way or not. Under the personal balance sheet, you can identify how many assets you have and the liabilities that you owe. After determining that, you will compute the net worth, which is done by subtracting liabilities from assets. It provides a snapshot of your financial situation at this point in time. If your net worth is positive, it shows that you own more than you owe. The cash flow statements provide the foundation for preparing and implementing spending, saving, and investment plan. It is done by recording your income, such as wages, scholarships, and self-employment business income. After that, you need to record the cash outflows such as the fixed expenses and the variable expenses. After determining your income and the expenses, you need to determine net cash flow by subtracting the income and the outflows. If there is any surplus, you may use the money for the spending, saving, or the investment purposes. In a nutshell, financial planning is very important for every human. It will help you to spend your money wisely and not at a will. It also helps you to achieve your financial goals and avoid the financial distress in the future. Benjamin Franklin once said, if you fail to plan, you plan to fail. Don't forget to share this video. Assalamualaikum.